Welcome back to Alberta Primetime. In tonight's Vocal Point, the price of natural gas has hit a 10-year low. How low can it go, and what are the impacts for us here in Alberta? We'll ask the Monday Money panel. Russ Dratwa is a senior investment advisor with Canaccord Wealth Management. Shafik Hirani is a director and senior executive financial advisor with Investors Group Calgary. And Beth Hamilton-Keene is a director and portfolio manager at Moore Investment Management, also in Calgary. Good evening, everyone.
Hi, Jen.
Good evening. Beth, the price of gas at a 10-year low, where are we at right now, and how could it impact us?
Well, certainly the low gas prices have been plaguing us for some time, but we've reached some new psychological thresholds with this $2 and slightly lower price on the New York Exchange. And as a result, it's having everybody kind of pause and reflect again. There's no doubt that we are in a protracted bear market in the gas side of things, and gas has become somewhat of a byproduct rather than an end target and goal. And there's been a lot of worry about where will the supply glut, get taken up by. Where's the demand going to be coming from? Of course, we're coming off an unseasonably warm winter, so that hasn't helped the demand side of things at all. On the supply side of things, we've seen continued improvement in technology in terms of the production of the natural gas, and of course that's continued to add to the supply. And we haven't seen the normal behaviors, and starting to see that right now in terms of those financial decisions of companies kind of shutting in and kind of shoring up a little, because it's been that chicken and egg game, I think, or game of chicken to see who will outlast who.
Well, yes. Russ, talk about how it might affect Alberta energy companies in particular, some big ones, Talisman and Canada, and those who invest in them.
Well, my understanding, it's about 3% of the Alberta royalties for a 2012 budget, but I mean the repercussions, the ripple effect, the employment and all that. But from an investment standpoint, I mean, when you start hearing these negative vibes, that's when you want to start putting them on your radar. 2008, the banking financial industry collapsed, and an example would have been Bank of Montreal. You could have bought an 8–10% dividend-paying stock at 50–60% depressed value.
But is that a higher risk? Because how do you know if you invest in a natural gas company it's going to be not gone in a year?
Absolutely, and that's the key, is you have to do your homework and make sure that you understand the debt ratios and how long it's going to last. And unless you think that, in my lifetime, I don't know if fossil fuels will be off the radar. I'm anticipating that they're going to be around. So then you start an acquisition. Now the key is, when does it become appealing? One of the major players out there, the dividends at 4.5% now, might not be appealing to some people, but if it got up to 6, 7, 8%, would that become appealing? And how safe is it?
Shafik, how does it affect our economy in general? It's been historically such a big part of Alberta's economy.
Yeah, and it's very important that we understand that Alberta is not just an oil province. We're definitely a big gas province, and it affects the province in about three main ways. One, there's a lot of natural gas publicly traded companies in Alberta. They will be forced to lay off people, especially at gas at these levels. Their inventory levels are up 50% over last year. Demand is down over last year. So there's no doubt that their stocks have been hit, and when the stocks are hit, they go down. The second thing is, Russ mentioned that the province collects a significant amount on a $50 billion budget. 12% of the taxation comes from not just people in the gas industry, but the companies themselves. So it does adversely affect the Alberta economy.
Beth, can you wrap us up here? We're talking about companies, provincial economies, government, even supply. Alberta Gas Storage sitting at 88% capacity. We already have enough set aside for next winter. Maybe it's about finding new markets. What's your big picture take on natural gas for Alberta?
Well, I think the big picture is that you've got to be patient, and that this particular sector of the industry is going to probably take some period of time. It could be 3, 4, or 5 years before you see some adjustment and change in direction from an underlying investment standpoint. Now, that being said, there could be some real momentum coming from other sources in terms of transitioning over from a coal production facilities into gas production and so forth. So there may be some take-up, but I still think it's important to be patient with recovery here.
Next, from new real estate data to agriculture, what are our Alberta Money panelists watching this week? And everyone talks about investing in gold. What about pink diamonds? That's next. Welcome back to Alberta Primetime in the Monday Money panel. Russ, this week you are watching a possible bifurcated market. What is that, and what could it mean to your Alberta clients?
basically, it's inferring that the Toronto Stock Exchange, our major index, is 50-50. I mean, it's half resources, which seem to be in a bear market because of what's going on in China, and the other 50% is doing fairly well since the recovery in October. So you have to be very careful as to where you're getting into. You want to look at troubled sectors, perhaps. I mean, gold's really come off here of late. I mean, natural gas, we've alluded to that. That might be a potential, but might be, like Beth said, 3 to 5 years perhaps waiting. And fertilizer companies I'm looking at as well.
Okay, we know our other panelists have lots to watch as well. Shafik, we'll start with you. 3 things on your list, including housing starts.
Yeah, housing starts are out on Tuesday. As Tuesday's the big announcement by Mark Carney about the interest rates for monetary policy in Canada. That should be very interesting, where we expect that nothing's going to happen. And so that's going to continue on, and we're looking for the wording and what he does, and that'll give us an insight into which way the Canadian dollar is going. And domestically, I mean, globally, I think you're going to see a lot of talk about what's going on with the IMF, and Christine Lagarde, who is the finance minister of France, who's now the director of the IMF.
International Monetary Fund?
Yes, the International Monetary Fund. The ECB is going to the IMF to ask for $1 trillion this week, and they're going to come up with a bunch of announcements. And you can see a lot of that impact European investments and the news. And
so that's when you want your clients to not have too many foreign equities, European equities in their portfolio.
Not the best time, yeah.
Just to go back to the housing starts, what are you looking there? What are you looking at seeing there? What do you expect? Is it U.S. housing starts?
No, it is U.S. housing starts, and that's a big figure. Canadian housing starts came out last week. The average Canadian home was $350,000, and there was a 0% change. We're expecting the same thing in the U.S. I mean, even when the housing goes down, they don't say housing's gone down. They say housing affordability is improved. So,
okay. Beth, what are you keeping an eye on?
Well, certainly, we've been looking at the housing side of things as well, and an interesting statistic came out just recently with regards to the average Canadian home is actually up 18% since 2007 on a cumulative basis, which is pretty hard to reflect on. The more important piece there is that the average Canadian home also outperformed the OECD in terms of the majority of other countries out there, and part of that, it seems to be attributed to the fact that the demographic of those in the age of 20 to 44 is more significant. It's been growing more in Canada relative to the other OECD countries. So that's quite interesting. Of course, that also contributes to that thought and worry about, is Canada going to be going through a housing bubble burst? And that, of course, is contributing to that worry. I would say, though, that we'll watch for these interest rate changes, and that really becomes, I think, the more immediate threat on the horizon is the interest rate changes. People
suddenly can't afford their payments anymore. Walmart Canada is set for a food fight with rival chain Target entering the Canadian market. 50% of Walmart stores do groceries, sell groceries. Target has a deal with Sobeys, so some competition going to happen there. Shafik, food prices have been edging up for years in Alberta. Could consumers be in for some better deals?
Yeah, always. Every time a U.S. retailer comes into Canada, you see increased competition for the Canadian. You see improved availability of products for the average Canadian consumer. This is excellent for Albertans, and I think it's going to enhance the competitive landscape, so it's great.
Russ, with world food prices as well as in Alberta, they're generally rising as well. Is there opportunity in the agricultural sector? Certainly a lot of farmland in Alberta.
Investing can be so confusing to people, but if you dumb it down into people have to eat, there's 7 billion people in this world. You just put something in your portfolio that's relative to people eating. I mean, it could be something as simple as food processors like Kraft, General Mills, farm equipment, John Deere, Caterpillar. Fertilizer companies is what I'm currently targeting right now. I mean, Viterra was just taken out at a 50% premium. We've had 7 consecutive weeks of the market going down, and nobody's talking about that anymore. So you're going to see these other competitors perhaps dip. It might be some great opportunity to throw into your portfolio. People have to eat.
Beth, we hear about buying bank stocks, energy company stocks, manufacturing. What about the grocery sector, food sector, ag sector? What's your take right now?
Well, certainly, like any investment, you do want to tread carefully, but there are certainly opportunities. The other advantage of buying in a food, a grocery store chain or something like that would be the fact that you may be inflation protected. If you think inflation will continue to rise, not just in food inflation, but inflation in general, you may be able to benefit from some protection. Generally, those food wholesalers or suppliers will be able to pass on those increased costs to their clients. And so as a result, you will likely over time have some protection. A little bit of pain in the near term, but generally that's one of the concepts you would be investing in.
Good to know. Finally, a long-term investment of a different kind. Edmonton's Burke's Jewelers location has on display until tomorrow a rare 10-carat pink diamond. There is a look at it. Just a mere $2.5 million. Russ, a lot of people talking about buying gold. Doesn't anybody invest in diamonds?
I sure hope my wife doesn't go look at it. I went and saw it. It was amazing, absolutely amazing. I talked to my go-to guy. He's in Antwerp, actually, the diamond capital right now, Ralph Vandenberg. So anybody, go talk to him, not me. But he said actually their yes and no is a great investment. He said that traditionally they hold their value, but no, because there's a liquidity issue. I mean, this is a consignment, this pink diamond. But there are some interesting ones he said that are called Argyle Intense and Vivid Pinks, because the mine is going to be defunct in about 7 to 10 years. So he figures that they should appreciate, but talk to an expert and talk to Mr. Vandenberg, not me.
Shafik, just very quickly before we run out of time, perhaps better to invest in a diamond mine. There are them. They do exist in Canada.
They do, but they're very speculative, and if you're willing to vaporize your money, then you might want to do it, but the return could be spectacular.
I always insist on a rate of return. Give me some interest. Give me something
money
to compound.
That's right.
Okay. Thank you, guys. Great talking to you all tonight. Russell Dratwa is a Senior Investment Advisor with Canaccord Wealth Management. Shafik Hirani is a Director and Senior Executive Financial Advisor with Investors Group Calgary. And Beth Hamilton-Keene, Director and Portfolio Manager, Moore Investment Management, also in Calgary.